I've made over $1 million in crypto. Let's react to my subscribers' portfolios. There's small portfolios, $10,000 portfolios, $100,000 portfolios, even multiple $1 million portfolios. But which ones are the very best and which ones are going to self-destruct? Okay, what do we have here? This one grew from $40,000 in October to a high of $114,000 in April, now floating around $100K. So far, so good, but how is it broken down? $74,000 is in Bitcoin, and the rest is diversified into a mix of smaller projects. We have meme coins like Floki, there's a little bit of Ethereum, there's a little bit of Solana, and $3,000 in Cronos, which is actually his second largest investment outside of Bitcoin. Bitcoin is more stable, obviously, so this gives his portfolio a nice defensive hedge against volatility of these other coins, but Bitcoin's the dominant one here. This is really useful though, given that he has money in meme coins or other high-risk tokens. Don't be a meme coin investor without proper risk mitigation, even within crypto. Think of Bitcoin as risk mitigation within the crypto space. But I do have a point here that I need to make. A mid-cap crypto that's on his list that I noticed, it's Cronos. This is actually his second largest holding after Bitcoin, but Bitcoin is much, much larger. Cronos is a boring but interesting project. Let me explain. It's an open source interoperable blockchain that supports dApps, that just basically means it's a blockchain that makes building applications a little bit easier. There's nothing sexy about it, but it is a solid project with a solid use case, which I love for a mid-cap. That's a sensible pick for growth potential. Sometimes boring can be good, especially if there's a business model there. Overall, he has a super secure portfolio with 74% allocated to Bitcoin, meaning it's more likely to survive the long term, and some solid mid-cap picks. Honestly, I give this guy an A. All right, this portfolio is kind of the opposite of the previous one. There's no big stable hedges here, like Bitcoin, straight into mid-cap, straight into the small caps. This guy has giant balls. 10% in Cubic, 7% in Relio, 6% in VeChain, 5% in Propbase, 5% in Kaspa. I can only assume that the remaining 69% is in random tiny coins like meme coins or other projects. This guy's a madman. I gotta admire his style a little bit. He definitely bets on sports on the weekend. Like, this guy he's going all in. I gotta appreciate that a little bit, but let's be honest, this is an insane portfolio. Super aggressive, designed to capture the upside of crypto volatility. I will say I'm a big fan of VeChain. That's one that stands out to me. They have one of the best use cases in all of crypto. Essentially, they use blockchain technology to help track items in real world supply chains, like from manufacturer to the store to, someone's home. However, I gotta say, this portfolio needs more large cap hedges against, the downside of crypto volatility. There's so much that could be lost in this portfolio. So while his loose cannon approach, it's entertaining to watch these people, I'm giving this a C-. All right, this next guy, he heard the words invest in crypto and he just straight up said yes.
Yes, please.
He has money in everything. His largest positions are in VeChain and Cardano, which I like, of course, but really he is spread everywhere, over 50 investments. This is extremely risky investments for the most part as well, with massive exposure both to the upside and the downside of the volatility of crypto. But here's the thing, assuming the numbers are right on his percentage invested, his level of investment within each coin of the 50 coins is very low, keeping his exposure per token per project very small. So if he loses in any one crypto, that'll be a very small proportional loss relative to his entire portfolio. So we'll call this butter style investing because this guy is spreading it thin. He seems to be gearing towards those freak pumps. I mean, with this kind of portfolio, you're basically betting that one of these just pops off and does a 30x and makes you rich, but you're also essentially betting that a few of these will totally crash and burn. It's very similar to how angel investors invest in startups. They're looking for the 1 in 100 company that'll pay for all of the losses of the 99 companies plus some, and that's where their profit comes in. So of course, you still need to be very disciplined in your picks if you do this kind of crazy investing. That's where I'm a tad concerned because I don't know how diligent he was on 50 picks, and realistically, how diligent can you possibly be for 50 picks in terms of like tracking all of these investments. It feels a little bit like a roulette table rather than a portfolio. I can't totally recommend this simply because it would be so hard to do it right and track all of these, but I respect it. I'll give it a C. Okay, take a look at this portfolio. I don't know if you can see this, $2.8 million in crypto. I wanted to highlight this one because it's a bit different than the others. First, it has millions of dollars in it, which is interesting. And second, this is Kyle's personal portfolio. He's our head of research over at Finova. I thought it would be valuable to show you how he does things differently than most people, even in regards to his portfolio. So 95% of his portfolio is in Bitcoin. As far as crypto goes, that's an extremely low risk portfolio. He has 3.5% in USDT, the stablecoin, and then he has some other small investments in Link, Ethereum, Litecoin, and Atom. I asked him, why so much Bitcoin? And he said he holds Bitcoin because it owns over 50% of the total market cap of the entire crypto space. We all know that, but he had a really interesting point on this. He said because it has pairing liquidity in everything, meaning you can trade basically everything for Bitcoin, you essentially own a small piece of the upside of every crypto that has a trading pair with Bitcoin. I've never thought about this before, but it makes a lot of sense. He also said he's no stranger to altcoins, but he typically sticks to conservative, solid picks like, top 20 market cap altcoins. He said that he's tried to do a lot of smaller alts, and this is what happened. Now, the real question is, how did Kyle build this massive Bitcoin portfolio? His strategy is super unique. He made his money in Bitcoin not by buying it and holding it, but by doing a specific strategy called inverse perpetual trading. This is where he bets on a future target price for Bitcoin, and then he funds his trade as the price moves toward his target. It's a higher risk form of trading, but with his individual rule book, he managed to grow $26 in trading. He traded that up to like 15K. And then he started doing these inverse perpetual trades. And over the course of a few years, that $26 turned into $2.8 million. It's like the most insane story in crypto. The problem with this story is it literally sounds too good to be true, but all the receipts are there. And you can see him in action for yourself. Kyle, he shares all of his trade signals and rulebook with Finova members. That allows them to copy his results. They have great results. He's racked up a win rate of over 87% across hundreds of trades. His research is consistently getting members wins like this, and this. Given Kyle's portfolio is conservative with limited and controlled exposure to risk, and just the results speak for themselves, I gotta give it an A+. If you're interested in getting access to Kyle's trades and his rulebook, as well as courses and signals from other coaches, sign up using the link below. Just grab a spot quickly because they do fill up every single week. Now, this next portfolio you're gonna have to take with a little pinch of salt. It's pretty wild. When I asked members to send me their portfolios, someone sent me this. $1.6 million in XDC. Now, XDC is the token for the XDC hybrid blockchain. This guy said that he put in roughly $20,000 into XDC when it was priced at $0.0003 per token. And now that $20,000 is worth $1.6 million. Hats off to him for the insane gains. That's honestly legendary, and it gets even crazier. This is his only crypto holding. That's it. That's his whole portfolio. XDC. He owns no other cryptos because he thinks XDC will replace Ethereum. It's a wild story, but personally, I would take some profits. I'd probably diversify a little bit. There's plenty of other ways that you can make money in crypto. Like you could, take a little bit off the top. What do you think of this? I think he's either a prophet, a madman, or maybe both. I can't recommend this strategy as far as going all in on one altcoin. This is just insanely high risk, but hey, he has amazing results. I'll give him an A for results and balls, but I gotta give it a C as far as a portfolio just because, there's just so much downside here. It's extremely risky. Next up, we got a $42,000 portfolio split between a wide range of cryptos. You've got juggernauts like Bitcoin and Ethereum. You got mid caps like Render, Solana, a bunch of meme coins like Snack, Floki, Nike, a ton of coins. But just look here at the bottom to see how he structured his portfolio. Around $22,000 into larger, more secure investments like Bitcoin and Ethereum, giving him, a good hedge against risk. Then you got around $15,000 in slightly riskier mid caps, which gives him, exposure to potential pumps, less safety, less safety, but more potential upside. And then around $4,500 going into super risky tokens. This is an example of someone who is intelligently trying to make a risky portfolio. He's giving himself around 50% exposure to high risk, high reward options with smaller holdings as things get riskier. He has slightly more proportionally in those tokens relative to small cap meme coins, meaning he has that chance to catch a huge altcoin pump, but the other 50% of his portfolio, that's the safety net in Bitcoin and Ethereum, that means he won't likely be completely wiped out if things go bad. It's a smart way to do it if you're trying to have a bunch of risk and a bunch of upside potentiality. Personally, I'd put more money into the big cap cryptos, more than a 50% allocation, but I'm gonna give this portfolio a B+. If your overall portfolio is an amount that you can afford to lose, then this is really solid. All right, here we got something weird. 11% Ethereum, 10% Bitcoin, 9.7% Cronos, 8.6% Solana, 7.2% Kaspa, 6.5% Jasmy Coin, 3.8% LCX. For the most part, this is fairly evenly distributed across large and mid-cap cryptos, but what concerns me is the 43.7% in miscellaneous. If this is random small cap coins, which I suspect it probably is, then this is a very, very risky portfolio. The mid caps, while nice, aren't secure enough to call secure. It needs more money in large cap cryptos to help balance this risk out. Based on the information that I have here, I'm gonna have to give this a C-. It's just too risky. You know what? Let's keep the ball rolling with the next risky portfolio. 14% in Multiverse X, 6% in Cardano, 5% Kaspa, 4% DAO Maker, XDC Network, Chainlink, and Solana, and 56% in other. Again, it's a little bit hard to say, with this one, other than this guy wants risk, unless that 56% is Bitcoin or Ethereum, you're looking at a portfolio that is 44% small to mid-cap cryptos, other than, Cardano and Solana, which are larger. Don't get me wrong, I like some of his picks a lot. I'm bullish on Cardano. Solana is solid. 14% in Multiverse X. That's a little bit wild, but I've made crazier picks, as you'll see in a second. And something else here, a hack that you guys need to know for large and mid-cap cryptos, if you're in the US, you can actually trade these coins inside a retirement account, which means if this guy had gains on his Cardano or Solana, he could have zero taxes on his gains. There's a few services that do this, but personally, I use iTrust Capital for it. It's an interesting strategy to look into. Just make sure it aligns with your personal tax strategy. Now, I have to do a little bit of guessing with this portfolio with, the other chunk. It's likely allocated to shit coins and other, just risky potential pumps. So I'm just gonna have to give this a C-. It's just too risky. Okay, now we got this guy. $600,000 down from a high of $667,000. Not bad. Over $300,000 in Bitcoin. That's 52% of his portfolio, acting as a stable hedge against the rest of the portfolio. There's also money in stable coins, USDC, there's also Ethereum, BNB, ADA, Render, some solid reliable picks. He's gonna need them because the next 20% of his entire portfolio is in SNEC, a high risk meme coin. Now let's slow down a second, because this is actually my portfolio, and I should probably explain what is going on here. First off, this doesn't tell exactly the whole story. These coins, this portfolio is up about 200%, which is great, but I've taken about $700,000 out of the crypto market in the last 3 years and reallocated that into a variety of lower risk things like this, nearly $500,000 in US Treasury bonds, which is basically the safest investment you can possibly make, but still 20% in SNEC in ultra risky meme coin. Why? Well, number one, I'm a little sick in the head. Number two, I helped build the product. So to me, this is more like owning equity in a small startup since I have some influence in the brand, which I wouldn't have with a random project. It's a little bit different perspective that I go into investing into something like this. Plus, I just believe in it. SNEC is building some great products like the exciting SNEC.fun, and we have the best crypto community on earth. That's worth something. So I'm willing to take a bet on them. Really, that's it. Overall, I give my portfolio a B+, which means Kyle's is the winner. Congrats, Kyle. If you want to see the exact way that he made his millions, check out this video on screen. It's super interesting.